Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Pål and Ville. This is Fintech Daydreaming.
Welcome back, everybody, to yet another episode of Fintech Daydreaming, where we bring you some interesting stuff, some scary stuff, some good stuff, and some bad jokes. We cannot forget the bad jokes. They are a stable part of our podcast. So they will happen as well. But we've got a really interesting episode for you lined up this week with a really cool guest. Ville and I have been trying to find someone perfect for this discussion, and we finally found the perfect guest for us to join us this time around. I am Pål and I'm going to be your host for this episode, but as always, I could never do this alone. I actually think that if we did try and do it alone, it wouldn't be Fintech Daydreaming. So as always, I've got Ville with me. And Ville, how are you on this beautiful morning?
I'm good. Spring is finally coming, which means in Finland, whenever you say spring is coming, you know that the next day it's going to start snowing again. So I'm hoping that the weather will remain good, as we always talk about the weather. But other than that, feeling good. We are actually in an interesting time for the podcast as well, because we are recording a lot of episodes in a very short period of time, which is, it doesn't happen that often, but again, it's going to be very, very intense podcast-oriented times for us in the coming week.
I realized that when we made the agreement that we would not talk about the weather at all during this season, that we didn't actually put any punishment to that. I feel that the listeners now have got the right to come with what sort of punishment would be adequate and suitable for Ville now that he did mention the weather.
Maybe, just send me articles about stable coins, and that's a punishment enough for me.
Yes, because Ville is really, really, really focused on stable coins. They're the most important thing for him. He reads about them and complains about them and buys them on a frequent basis and wonders what he's going to do with them. But we all know what we think about it here on the podcast. But anyway, Ville, we have had a number of fintechs join us, early stage startups, talking about their fantastic journey. We actually had Jonas join us very recently from Enable Banking, talking about his journey as a founder, doing the startup and the journey he went on. What we've never really had is someone that can share some insights from the other side of the table, the procurement process in a bank. And we've been talking about this quite a lot, about finding the right person that could come in, that's got the energy and the passion, and talk to our listeners, all of those founders and fintech starters out there, on what is it they really should be thinking about? How should they communicate with a bank? How should they be thinking when they are engaging with a regulated entity that are waking up every morning thinking about, how do I make sure I do not lose my banking license tonight? And I think we found the right person. What do you think?
I think this is a bit of a sequel to one of the episodes we did earlier with you and McLeod, when we talked about how to sell to banks, basically, and mostly actually how to not sell to banks. And that got a lot of people interested in the topic, and we had a lot of good listener numbers for that episode as well. And ever since, we thought about, we need to come back to this topic, and I think this is the perfect sequel, 2.0, if you will, of that episode. So looking forward to it.
Yes, absolutely. And we have managed to find the perfect Chief Procurement Officer for you. Markus, who is a Chief Procurement Officer at Savings Bank here in Finland. He's joining us for an interesting discussion. We don't often do disclaimers on this podcast, but I need to do a little personal quick disclaimer. In my day job, I work for a fantastic company called Samlink, and Samlink is a provider of a number of services to Savings Bank where Markus is working. So just to get that disclaimer out there, but this podcast obviously has nothing to do with our day jobs that Ville and I have got. that disclaimer out of the way, I'd love to introduce Markus. So Markus, why don't you share with our listeners a little bit about yourself, the journey you've had and how you ended up becoming the procurement officer at Savings Bank?
Yeah, thank you. And I'm really thankful that I got the invitation to this podcast. And yes, I'm Markus Niemi-Nikkola, currently working for Savings Banks Group and our Chief Procurement Officer. I'm responsible for the vendor landscape and that they actually provide what they promised to provide to us and so that our business continues in good shape and things like that. I ended up in this position it was kind of an accident, a positive accident. I was supposed to be a math and IT teacher, and at some point of my life, I took a position from small IT company, and just to see what the IT actually looks like and what it is. And well, you give the little finger, you lose the whole hand. So here I still am trying to learn what IT actually is about. So I started as a coder. I've been software architect, team leader, salesperson, ICT controller in savings banks, and a program director, and various positions. Last 4 or 5 years, something like that, has gone in this position, which is actually really nice, because when you have actually implemented stuff, you have led the people who implement stuff, and you have tried to sell those. It's really easy to buy and to steer and to collaborate with the vendors, because you have the understanding when it's needed and toughness when it's needed and so on. But this kind of guy who has done this and that during my long career.
When I started my career in the technology in like the early 2000s, one of the first things that I was told as a very young engineer was that people who work in procurement are the worst people in the company, because they need to be the worst people and the meanest people in order to get the best prices and everything. But you don't strike to me as this kind of person. So, I mean, is there any truth that you need to be a very mean person to be in procurement?
Well, you can do it if you want to be old-fashioned. Yeah. You get results with that. Depends on what you buy and what you want to achieve.
Yeah. Well, again, this advice is 25 years old, so.
Yeah, but you can be as productive with other means as well. Depends on your situation. If you're buying components or things like that, maybe the meanness is the way forward. But if you actually want to achieve something with the vendors, I suggest other kind of approach.
I suppose to a certain degree it depends as well on what it is that you're procuring. If you're buying paper clips and staplers, it's probably a lot easier to be a hard-faced, mean person. But if you're buying services and building a strategic relationship, it's very much more about finding a 1 + 1 = 3 capability, right?
Yeah, because you can look only at the price when you buy commodities and paper clips and computers, hardware, whatever, that kind of stuff. Then you can just look at the price and, of course, the reliance on the service, so that they actually can provide and things like that. But you can achieve a lot by just shouting to the vendors, I guess. But if you really want to go far, I suggest that you actually collaborate with the vendors. You can still be tough, and you can still ask for a lot, but you can be polite when you do it. It's more fun that way.
I remember that saying, I'm not here at work to make friends, but I think we all enjoy a little bit of good relationships as well. But let's sort of move into the whole notion of the fintechs and the startups, because I appreciate for most startup founders, they are living on a day-to-day basis. They're trying to feed their family. They're trying to get things up and running. They're chasing after venture capital and everything else. But very often I've noticed that, particularly for fintechs, we're talking about financial technology, so they're very technology focused. And they almost have this belief that as long as I can build a product good enough, all the banks will find a way to buy it, whatever the case is. And I don't actually think that's necessarily true. So to help these fintech starters from a banking perspective and from your perspective, what do you usually see as them underestimating at a starting point when they're trying to interact with a bank to sell their capabilities?
Well, everything boils down to the business case always in several different point of views. So that's basically one big thing. Of course, I think that when the product is good, when the banks can use it and so on, but it's not that simple. Anyway, as a bank, you have to see that is there business case of using that product? Is there need for that product? And even if there is, what's the continuity of that product? It's really simple to buy something, but it has to be maintained in the long run. And that's something that most startups are kind of dismissing. They don't see our side of the table. When we launch it to the customers, it has to work every day. And it's really expensive if it's not working, if something bad happens and you have to fix that. You have to use a lot of time in your side of the table. And it's really expensive. So when we look at the business case, we look at many different aspects of that. Not to mention the security, which is also a really big piece.
So on that point, actually, I mean, coming back to my early reference to my early engineering days here in Finland, do you see any regional differences here? Because to me, it sounds like almost like a Finnish stereotype that we are the kind of people who, if you build it, they will come kind of thing. And then you forget about the whole value proposition and business case development. But then another stereotype is that, the further west you go, the less you will see this attitude. Do you recognize that from a bank's perspective?
Yeah, maybe at some level, yeah. It's really kind of easy to think that when we start doing something and building something, it will kind of last. But it doesn't go like that. When we do the decision, or at least when bank or any financial entity makes a decision, they have to consider all the aspects there, not just try and go, unless you do it internally or something like that. But it's a really difficult position, and I really empathize those startups, smaller scale of fintechs. It's really hard to make that success, because we are not buying that easily.
I suppose it comes back to what we keep seeing quite often, Ville, is technology seeking a solution to solve rather than a problem that's being solved where technology ends up being the underlying end result. And repeatedly we see this. We saw this with blockchain, and we've seen it with, more recently, AI as it's growing up. So again, as I'm taking this, Markus, it sounds almost like you're saying that for the founders, these startups, obviously they are focused on the technology. They come very often from a technology background, but they really need to make sure that they understand what is the business value and the business results that they're going to be able to deliver to the bank to help the bank to move forwards, rather than just saying, here's some cool technology that you maybe could have some fun with.
Yeah, it depends on what they're actually offering and who they are competing with. So if the product is commodity for a financial entity, it's really difficult to buy it. Because when it's commodity, you normally want to share it with as much customers as possible. And you have to have that business continuity and security and everything else in place. So I get calls quite frequently with new products and things like that. And what's lacking is first of all, need in our side. We probably don't need half of those products that are offered. And they only have the product. They don't have the operating model upon that and the delivery and everything else. They not that sometimes they don't even know where to run it. They just have the product. So it's really difficult to go from there, because you have to have the security, you have to have the continuity, you have to have the vendor continuity and many things there. So it's really easy to fall into that trap. I have this great thing, would you buy it? It's not the best speech that you can deliver.
Absolutely not. There was a phase where a lot of banks were running these innovation teams and innovation centers where they were desperately trying to find fintechs and startups to invest in and to adapt and adopt, etc. Do you see this as a relevant model for engagement going forward still, or is that something that's died away and the fintechs should potentially not continue seeking for that route into banks?
Well, the collaboration is probably good because then you can actually innovate, but there's risk in vendor side that the financial entity is actually trying to figure out ideas what to build. They're not actually, maybe they're not buying from those fintechs that they're talking to. That's a risk for vendor side. But yeah, I think it's fruitful, and it depends on the financial entity. If they can absorb what they have bought in a situation where the vendor is no longer available, I think it's easier to go. But for institutes that don't have, for example, their own people to operate things and stuff like that, I think they struggle to buy. So it depends on the entity. And yeah, I think it keeps this landscape fruitful. So when there is discussion between banks and those startups, but it's really hard to see that it's going somewhere because banks are quite risk averse. So I think it's a bit difficult relationship that can be, with a really big bank, really small startup. How balanced is that actually?
Yeah, and from my perspective, from my experience, many times when banks are doing these innovation labs or digital incubators, whatever you want to call them, and then they deal with fintechs, it's kind of false advertising because in most cases these fintechs end up in this proof of concept pilot hell that will never get you into the production or the real production because the real business owners are not present in those innovation labs, so those bubbles inside the banks. And this kind of a well-known innovation chasm problem has been discussed even in this podcast many times before. But from a fintech perspective, it's almost deadly because you get the impression that the bank is really interested and you're able to even put like your logo on the webpage saying that we have this bank as a reference customer because we did a pilot with them in the innovation lab. But then that really doesn't scale into real business easily. And I feel that this is a fundamental problem of this interaction between banks and fintechs. But how do you feel? Do you kind of see that similar kind of a dynamic?
Yeah, I see, and it's actually a common pitfall. It can happen also other way around. We banks, we tend to ask offers for this and that and discuss with the vendors, and sometimes we do it in bunkers, how I like to say it. We send those RFPs and they are vague and not clear enough and so on. And in the end result, it might actually be that the buyer doesn't exactly know what it has bought. And the vendor doesn't know what they have sold. So the best things happen when the vendor wants to achieve what you want to achieve. Then big things can happen, and there's win for both parties and so on. So that's something that actually can fly, and that's what is challenging for the startups and smaller scale of fintechs. If the product is not something that the bank actually want to achieve, if there is no mutual goal, it's really hard to go forward. But when you find that spot, then it's really easy. And from that perspective, it's really important for financial entities to discuss with the vendors and monitor the landscape and see the possibilities that there are. You just should be as efficient as possible so that you don't waste the time of those startups. But when you find something that you can actually use and where you also see a win, then you can go forward.
You actually bring up
the mistake that many people do, not the organizations, but the people. They discuss with another person. They have ideas and they think, yeah, this is really good. Maybe the organization that he or she represents doesn't have the need for that. And then there's this internal discussion that should we go in this path, and you get red light from everywhere. And it's really difficult to say no to the person that you have talked to. And then you continue the discussion. And you waste the other person's time.
You actually bring up an interesting point in what you were talking about, all around the sort of fluffy RFIs, RFPs that are being sent out by the banks. Now, I'm going to use this as a small opportunity to do a little bit of self-promotions. My book, Rip Out the Core, will come out in July this year. And one of the things that I state in my book categorically is that I believe that the life and the time of RFIs and RFPs have disappeared. They don't bring the value anymore that they potentially did, because we're moving into a more hybrid world of working and growth of technology, or acceleration of technology and technology use. You sitting in the procurement side, a lot of banks are still very focused on this RFI, RFP process, huge, long 2,000 question spreadsheets that get sent out. What's your view of this whole process from a procurement perspective?
That's a really good question, because that's something that I've been trying to change for some time, and we are actually changing in the organization that I represent. But the old way of doing those things it's ridiculous. I've seen this in lots of different places. The buying organization, they build up that RFI, and of course there's some mistakes there, because RFI stands when you need more information. You are not sure that what you want to procure. You start an RFI process, and then you do your scoping and architecture and all that stuff, and you wrap it in an envelope and send it to the vendors. And then the first mistake that you do, well, of course, the mistakes in the documents, but the next big mistake, you state that if you talk to any one of us, you are out. That's the meanness or toughness that's actually not needed. It's unnecessary. You should have the collaboration, but most of the organizations, they deny that. Don't talk to us, reply to this RFI, and then they wait 3 weeks or something like that, and they get the response. Then they are looking at the responses and trying to figure out that who had the crystal ball. And then they select and think about that. Okay, this and this and this. And time passes. They have lots of internal discussions, and they're trying to figure out that how to go forward. And they give points to the vendors and things like that. But time passes. What happens in vendor side is that they don't hear anything. That's the second mistake. Don't talk to the vendors, and don't tell that what's happening, what's going on. They think that we lost this opportunity. The bid team is gone, and they focus on the next case. Time passes, and now the client is ready. And they think, okay, we will use these 3 vendors, because some rule says that you have to have 3. And they decide that now we go to the RFP phase. And they change that I into B. They send as good or as bad material again. And because those vendors were in RFI phase, they only need 2 weeks to reply. They surprise the vendors again by sending their RFP envelope, stating that you cannot talk to anyone or you are out. They try to get what they want to get by being mean, by being hostile. They don't even understand that they are hostile or mean. You have only 2 weeks time to reply because you were in RFI. The bid team is gone. And then in the vendor side, they're thinking, okay, we got this by surprise. Who did we have last time? And they try to gather the people back, and they try to reply. And you get really bad offers. If you want to have a better position for those projects, you actually collaborate with the vendors. You make sure that they understand what you want to achieve. Maybe you even crystallize what you want to achieve by those discussions. You should be collaborative. You must have those documents. You must make clear that what's your scope and what's your big plan and things like that. You have to make those materials, because at the end of the day, you will have a contract and you need those documents there. But don't send those envelopes. It's unnecessary. Have conversations with the vendors and do it as efficiently as possible. You can meet 10 or 15 vendors for one procurement case that you have, if you just want. And it's quite easy. Ask the most essential questions first, and then try to figure out that which one is not the one for you. Tell it immediately so that you don't waste their time and so that you don't waste your time. And narrow it round by round by round. I call it collaborative procurement. Some call it dynamic sourcing, but it's in essence, it's the same thing. And you can be really nice, you can be really polite, you can keep that atmosphere really good, but you can still ask a lot and you can get a really good project out of that. Because the one thing that the procurement is actually doing, and everything has been honest, but this is really honest, procurement is risk management office. That's what we do. We make sure that we don't have any bad risks. And in really wide scope, if there is positive risk, like opportunity, we make sure that we actually get those. I'm not measuring my success based on the deals I have made. I measure it by the collaboration with the vendors and the deliveries that they do, our business cases. Because you can buy technically really good, you can have the best price and the worst terms and conditions in the contract, and then you can be that, yeah, now I was really good. Maybe that project will never be delivered, and you can never get the time back.
When I was working on the vendor side, it always felt to me that the banks always sent a massive RFP on the week before midsummer, and then the deadline was at the end of July. Which of course, especially in the Nordics, is like the peak vacation period. But anyway, that joke aside, maybe actually shifting gears a little bit and looking forward. Everybody knows that when we do these big RFIs, big RFPs, and then the vendors respond to them, a lot of that work is fairly standard work. So what used to happen, especially before, is that you got that massive RFP, and then you basically locked a team into a room, a war room, and then you churned out the responses to the RFP and then made sure that all the estimates were correct and yada, yada, yada. Now, it's perceived at least that a lot of this work is done by AI, because you've already responded to so many RFPs. There's already all the documentation available inside your company. So the RFP response becomes automated from generative AI. Of course, it needs to be manually checked, but again, that work is now faster. Now, I'm presuming that AI is also used to create many of those RFPs. Do you see this trend? I mean, do you see AI being used? And if you do, how do you see it? I mean, is it better or worse than what we used to have?
Yeah, I see the trend, and it's good and it's bad. It also depends. I think it's more productive to use the Gen AI. That's for sure. And it's also really good that we actually use it, because the Gen AI can document our requirements. It can also document the capabilities of the vendor. It helps a lot. But I see two difficulties. One is the mutual business case. I don't believe that AI can do it yet, because that demands actual collaboration with the financial entity and the vendor, or any customer and vendor. So for technical RFPs, I think the AI will be really, really good and make it really efficient. But then there is that finding of vendors, the vendor landscape. One responsibility that my unit has is to understand what kind of vendors there are in Finland, in Nordic and so on. What possibilities do we have? And that's something that AI helps a lot. In future, I believe that when you have your requirements documented, you can ask from the AI agent that please find me suitable vendors for this need. And it's probably something that makes things really, really productive. But when you look at the fintechs from the smaller side, are they actually AI enabled? Is it possible that the agent asks from them that what can your company do? Because that is something that, when you think about any company and the website that you have, in future and probably already, you optimize your website so that the AI can get everything out of that. That is something that all the vendors have to do in future when the AI is taken fully in use in buyer side. So it's good and bad. It may end up in technical ways of working. That's the downside. If it kills the collaboration between the buyer and the seller, then it's really bad. And we should be careful so that we don't do something like that.
You actually bring up a very good, interesting point. I'm just reflecting here on, we said most early stage startups is a very small team. There's not very many people. They're trying to do an awful lot of things. They have to somehow not only demonstrate credibility to the bank, but they also need to make sure that they've got the capabilities available for these AI agents to be able to find and reflect on. So one of the things that I'm thinking about here is what should a young aspiring fintech be doing to demonstrate credibility to a large bank? From your perspective, if you're looking across the sort of landscape of vendors, you've got everything from startups that started very recently to very established players. Where do you see the credibility, or what sort of things do you look for, particularly from the younger, newer startups, that make them even relevant for you before you disregard them?
Actually, a really interesting question. Because when I look at this precise moment, the current ways of working, financial entities, they appreciate, of course, the delivery. You must be able to deliver. That's essential in the first place. And like I mentioned in the beginning, everything must be secure by design. And then there has to be continuity. If it's really small company, there is lots of financial risks, and they might even sell the company, cash out. And then the buyer thinks that when they are going to do that, and what happens, and who they might sell to, and things like that. So there's lots of things, and the maintenance. That's one big item. When the delivery is done, it's in the production. How do we maintain it? If you are an entity who has that capability and they can absorb everything and maintain it by themselves, then it's easy. But if your approach is different, if you don't have that people and you buy the delivery and you buy the maintenance and everything in package, then it's more difficult. But in the future, in the post-coding era, where we don't actually code anything, we use AI for coding and things like that, maybe that actually changes. And the smaller companies have better possibilities, because then it's enough that they have the vision of what you should build, what can you use, and so on. Maybe that even changes in the future.
One of the
that was really, really good. Thank you.
So one of the typical situations, also what happens, referring to this exact conversation, is that the banks require these massive risk management processes from everybody who they buy from. So they call it sometimes third-party risk management or TPRM, which kind of kills the smaller fintechs because ultimately those questionnaires are extremely long. It actually takes a legal thing, and there's going to be all sorts of third-party audit requirements when you are becoming a vendor for a bank. And many fintechs cannot even do that, and they're automatically disqualified from being able to sell to banks because of that. Do you see this very heavy risk management process evolving perhaps in the future, where it would also allow for smaller companies to be able to deliver in one way or another to banks?
Yeah, I predict that it will stay. We will have that, of course, based on DORA and several other regulations. We just have to do that. But it's also the common sense. When you are building something for your customers, when it has to work, you have to be aware of the risks and you have to assess those. And the fact is that the smaller the company, the bigger the continuing risk is. There is a risk that it doesn't fly, or it's sold, or something like that. Or when your demand grows, maybe there is not enough people to do the work. And that's probably something that the AI and the post-coding era does. It helps the smaller companies. But currently, that's a really big thing. Can you scale? That's a big risk. Financial entities will continue to assess those risks, and they will be really careful several years, I'd say, still. And it comes, partly it comes from the DORA. Now you have the critical and important services that you provide, that you provide to the customers, and you have to be really careful for those. There's lots of things that you have to add to the contracts and make sure that things work, and so something like that. That's one big reason what makes it so difficult for a smaller company to sell to the financial entities. You should sell something that's not critical, then it's easier. But if you sell something that's not critical, it's not that interesting. Why would financial entity buy something that's not critical, not important? So it's really difficult situation at the moment. And it's not easy also for the bigger fintechs. They are not every time prepared. Sometimes they counter that where we are big enough, we can just offer something and suggest something, and they count on that yes, the banks will buy. It's not that simple. You have to assess the risk also for the bigger fintechs. It's all about risk management anyway. If you have really good business case, you see that when we have built a new service, for example, then we can do a lot for our customers. And maybe the vendor who is providing that, they have lots of opportunities for other customers as well. There is a situation where you have that win-win scenario. Both want to achieve the same thing. Different perspective, but the same thing. Those are the times that really good things happen. But even in that situation, you have to assess the risks. Because if you really want to achieve something, and then something terrible happens, you don't get it. Or you lose the time or effort or something like that. All the time you have to be really careful, because if something happens, it takes longer to build whatever you are building. Maybe you lose the opportunity and you lose the business case. So for the business case, you have to assess the risks. It doesn't go away.
Indeed. I always try to console smaller fintechs on this, that you go through this once, especially if it's with a larger bank, then that's going to be a big investment for you. But then you can actually reuse. It's going to be much easier when you sell to other banks. So it is clearly something that is perhaps a little bit misunderstood, especially by the early stage fintechs, is how much investment you actually have to put to go through these risk processes. But once you do it, it starts to pay dividend, because again, you can reuse a lot of those processes for the future customers as well. But yeah, anyway, just my 5 cents.
And I think there's a perception issue here as well. If we look at a lot of the early stage fintech startups, I won't say all of them, right? But a lot of them, they are people that come from a technology background. They necessarily haven't worked in the banking industry or the financial services industry. They come with a, design for failure approach, etc. To them, they have an assumption that, well, if something fails, you just stand it up again, or the Netflix approach. What they don't realize is failure could actually put the leadership team in jail. It can make the bank lose their license. So when a bank, back to what Markus was saying about risk management, when a bank makes a decision and the risk is wrong, it actually could have catastrophic impact on them. It's not like Netflix where it's buffering my movie. I'll come back in 10 minutes after having made some popcorn. You won't do the same if you're trying to make a payment. It's not, my payment's buffering. I'm going to go and make some popcorn and come back. So I think sometimes the small fintechs need to understand this. It is about being risk averse and being able to demonstrate from a credible perspective how they're going to deal with risk to the bank. Which actually brings me to a slightly different question, Markus, because we're starting to run out of time here, as we always do on the podcast. But if I'm a young fintech, I've just started up, I've got a great idea, I've done some MVPs, they're ready, I want to take them to a bank, I think that this is going to change the world. Do I go to line of business? Do I go to the procurement officer like you? How do I engage with the bank? I have no idea. It's a big, scary financial institution. Where should I go?
Maybe both. And if the line of business is not answering, then maybe you could give a call to a procurement. If there is a good procurement in place. If there is only the ones that shout at you, don't call to them. But if there is people who actually see possibilities and is modern one, call them. But make sure that you can crystallize your idea and so that you can actually present how the financial entity can use what you have or how the customers can use it. If you have the pitch ready, just call both of them. Really vague answer, but that's.
But is it call them, or when we spoke to Ewan, Ville, if you remember back, Ewan said the best way of getting engaged with the banks is at the events, the fintech events, the banking events. From your perspective, Markus, is that correct? Is it better to try and grab the bankers and the procurement officers at the next Nordic FinTech event? Or is it to try and grab the bank and the people in the bank at work?
Well, yeah, the events is quite good, but we are ordinary people. So if the event is 8 hours long, and you reach them at the late hours, someone has the stamina, but some others don't. So it's not necessarily the best place. Depends on the time of the event that you actually reach the customer. So I would suggest, if you have really good story, just to try to contact them out of those events when they actually have time to listen to you, and make sure that you can say what you can provide in 30 seconds.
Yeah, it all comes down to that elevator pitch. Can you actually get your messaging across and the value proposition across in 30 seconds? Like I said, we're starting to come to the end. So I'd like to sort of try and wrap this up. If you could give one piece of advice to an early stage fintech founder trying desperately to get an opportunity to get to a bank, what would be that one piece of advice?
Believe in what you are doing. Because when you do, others will notice that, and then they will get interested. Really difficult to give one advice, but that's what I chose this time.
No, but I think that's really good advice.
Very, very fundamental. So yeah.
Yeah, absolutely. But with that, dear listeners and Markus, we've sort of come to the end of another episode. Is there anything, Markus, that you would have liked to have covered in this discussion that we never got to, or something you still want to get off your chest?
Maybe the joke.
Yeah.
Oh, I'm getting to that, Ville, you know that.
Well, I have one thing, and it's sometimes when I meet people in event, and when I say that I'm from procurement, they may even take a step farther. We are not mean people, the modern ones who know how to do things. So don't be scared to meet us. Have a good story, and then there's one thing that's procurement ready. You might sometimes hear that you are not procurement ready enough. I don't believe in that. I don't think that there's such thing as procurement ready. There is delivery ready. That you should be. It's kind of the same thing, but there is no tempurata in Finnish. There is not something that you have to go and do things like that. It's not like that. You have to be able to deliver what you promise. You have to be deliver ready. That's what you have to do. And when people say that you are not procurement ready, that's perhaps they're meaning that. Or the other possibility is that they don't have the approval internally. And then they say that you are not ready yet. That's maybe the only thing that I wasn't able to say during this really, really nice discussion.
I've got to admit, it has been a really nice discussion. I also have to say to all of your early start fintechs out there, if you do happen to bump into Markus at one of the events, then I can promise you he's a fantastic guy to talk to and share a coffee with. So don't be scared, even though he's got a scary title. He's a really nice guy, definitely not one of the scary ones in the procurement world. But like Ville said, we always enjoy having a good but bad joke. Ville normally does it at the start. I do it at the end, and Ville starts panicking because he thinks I've forgotten about it. But I generally don't forget about it. So, Markus, we do ask our guests if they've got a good but bad joke. Do you have one you want to share with our listeners?
I have.
Wonderful.
Yeah, it's procurement joke, but it's in fintech context. So, are you ready for that?
Absolutely, yes. Bring it on.
Okay. So, do you happen to know what are the second biggest and the biggest lies in the world, in the whole world? No.
No, go on.
Okay. So, imagine a fintech having really good discussion with the financial entities. It has been going on for a while. Everything is going quite smoothly. Then the procurement comes in and says that I'm here only to help. That's the second biggest lie. and the fintech responds, I'm so glad that you are here. That's the biggest Also, of course, education that don't do your work like that. But
Hey, we were not supposed to have good jokes here. That was a good one. So.
They were actually really good. And this is coming from someone who said procurement people are not scary and mean.
Yeah. Yeah.
Oh, that was wonderful. Thank you very much, Markus. Thank you for a great discussion. It's been really good having you on here. If people want to reach out to you to find out more, sell you their fintech, or just understand more about procurement, how can they find you and reach you?
LinkedIn, that's the easiest one. And I usually participate in lots of fintech events, so you can also spot me there. But LinkedIn is really good.
Perfect. Wonderful. Thank you very much. Ville, any final remarks from you or reflections?
Maybe it's good that the AI is not going to replace procurement or selling anytime soon. I really kind of, my takeaway of this is that we will always need the human element when we make these deals in one way or another. And again, it's going to be a question of how much we automate of this, but there's not going to be a situation where the bank is buying with an AI agent and the vendor is selling with an AI agent and there is no human interaction. I don't think that's going to happen, maybe ever. But again, it was a good connection to a lot of the big questions that we have today about AI.
Yes, absolutely. I agree. And I, for one, think that the role of procurement is going to change, particularly in banking and the financial services industry. I don't think it's going to go away. And to follow up on that, there's a whole chapter around that in my new book that's coming out soon, Rip Out the Core, where we will cover some of that in more detail. But if you want to know more about Fintech Daydreaming and you're still with us, then you can find out more about us on our website and on our LinkedIn. And if you are still with us, please give us a thumbs up if you've enjoyed this discussion. Share the episode with some friends so that we can get more listeners. And subscribe on whichever channel it is you're following us on. And we are on all the other channels, including YouTube. So check us out there as well if you want to see what we look like whilst we're talking with all of these wonderful guests we've got. Ville and I will be back in 2 weeks. Actually, Ville, Jana and I will be back in 2 weeks' time with another episode of the Nordic FinTech Highlights, where we go through the latest news from the FinTech world. But until then, this has been FinTech Daydreaming.
This is FinTech Daydreaming.